In this lesson, we are looking at a paper 2 topic, which is cost accounting. We are going to do a production cost statement, and then we are also going to do an abridged statement of comprehensive income, which is a short form statement of comprehensive income. And then lastly, we are going to do a break-even point calculation. We have a June 2022 question paper, and it is a Gauteng paper. In question 2 of it, we are dealing with cost accounting, and the business that we are dealing with is starter Heim manufacturers. It says you are provided with information from the records of starter Heim manufacturers for the financial year ended 30 April 2022. They manufacture coffee tables. Our required in 2.1.1 requires a production cost statement for the year ended 30 April 2022. In 2.1.2, we are required to do a abridged statement of comprehensive income, which is income statement for the year ended 30 April 2022. And then in 2.2, we are going to look at some fixed cost and variable cost explanations, and then also calculate the break-even point for the year 2022. So let's go ahead and get started with our production cost statement. In our answer book, we can see that direct labor has already been entered in our production cost statement, and what we need is to calculate direct materials. And for us to calculate direct materials, we are going to look at information A and information B. Information A shows us the stock records for 30 April 2022, which is our year end, and 1 May 2021, which is our year beginning. So we can see that at the year beginning we had opening stock of 112,800, and we had a closing stock of 175,680 at the year end on 30 April 2022. And then in information B, we are finding our purchases for this financial year. Raw material purchased is 1,665,000, and then we had to return 63,000 of that stock back to our supplier. So we are going to use only those amounts to figure out our direct material cost. So starting with our opening stock, because that's the stock that you will usually use first, especially if you have been told the type of inventory system that is being used. This question was silent, but we can always assume that you start with using your opening stock because it makes business sense. So 112,800, and then you are shown that you purchased during the year 1,665,000 worth of stock. So you're going to add that to the opening stock that you already had on hand when you began the financial year. And then from this amount, they're telling you that 63,000 of this amount was returned to the supplier for whatever reason that could have been given, whether they were damaged, whether they were at fault, whether they were extra. It doesn't really matter. All we know is that it was returned, so we have to subtract it. And then we also subtract the stock that we didn't use for this financial year, which is our closing stock at 30 April 2022 at 155,680, and then we will get our total for direct material cost. Just to reiterate, remember what the opening stock is added here. It's a positive amount, and it's always added because we are going to start with using it, as we have already explained. And the closing stock, which is the stock at the end of the year, is always subtracted. Why? Because we are going to start by counting it in the next financial year. So it doesn't make sense for us to add it here and then we're going to open up again with it next year, because remember, this year's closing stock becomes next year's opening stock. So you put all of this in your calculator and it gives you a direct material cost of 1,539,120. As you transfer to your answer book, remember to show your working and put your final answer there as your direct material cost. And then now you are going to add your direct labor and your direct material in order to get your prime cost. So your prime cost will be DL plus DM direct labor, direct material will give you your prime cost 3,690,000. The next line item after prime cost is factory overhead cost, and in our extract B, or in our information B, they have given us factory overheads as 1,405,350, and we are just going to use our additional information C in order to adjust it. In additional information C, we have information Roman figure 1, and it says the entire insurance expense of 68,000 rands 250 was entered as administration cost in error. 60% of this expense should have been allocated to factory overhead cost. So that means that out of the 68,250, we need 60% of it to come to our factory overhead cost. So add only 60% of 68,250. So we only want its 60%. And then Roman figure 2 says factory overhead cost includes the total amount of rent paid for the financial year 108,900. Rent expense should have been allocated according to the floor area occupied as follows. Factory is 400 meters. Factory is 400 meters square, shop 80 meters square, and office 120 meters square. So that means that we are going to use the ratio 400 is to 80 is to 20. So first of all, let's deal with the one that was included in our factory overheads as a total. That amount is wrong, so we need to start by first subtracting that amount, and then after we will add the correct one. So we will take out the whole 80900, and then we will add the amount that is correct, and we are going to figure it out in a bracket. So we were supposed to add only a portion for the factory. So using our ratio of 400 is to 80 is to 120, we are going to look at the portion that belongs to the factory. The portion that belongs to the factory is 400. So out of the 108,900, what we were interested in was the portion that belongs to the factory alone, which is the 400. This amount represents all of those spaces, meaning the factory and the shop and the office. So that means that in this amount we have all of those 3 spaces. So we are going to say I'm only looking for the 400 out of everything. Everything is you adding 400 plus 80 plus 120, and it gives you a total of 600. How did we get it? This is just in case you forget, 400 plus 80 plus 120. That's how we got the 600. So basically it is that method that we like of unknown over known. What I don't know is this 400. That's what I'm looking for. And what I do know and what I've been given is this 600. So that's all that I'm looking for. So that's what you multiply with. So we have 1,405,350 plus this gives me 27,300 minus this 108,900 plus this gives me a total of 72,600, and punch everything in your calculator and get a total of 1,396,350. this 1,396,350 will be added to the prime cost of 3,690,000, and it will give you a total manufacturing cost of 5,086,350. That's your total manufacturing cost. Remember, it is prime cost, so PC plus factory overheads, and it gives you your total manufacturing cost. We are then going to fill in the balance for this space that is given here, and for this space we are adding our total manufacturing cost together with our work in progress at the beginning of the year. So this 5,086,350 plus 426,000, and it will give you a total of 5,512,350. And then we are going into this line item to fill in our work in progress at year end. So this is the one at the beginning of the year, this is the one that's going to be at year end. When you look at information A, work in progress for 30 April 2022, which is our year end work in progress, was given as a question mark. So we are going to use this as a balancing figure. So we are going to leave it to be our balancing figure, meaning we need to find our cost of production of finished goods, and once we have it, we can use this amount and this amount in order to figure out our work in progress at the end of the year. To calculate our total cost of production of finished goods, we are going to use information D, and it says Starter High manufacturers produced 39,000 units at a cost of 135 each. So the calculation for cost of production is just as simple as taking our units and multiplying it with a cost per unit, and it gives us a total of 5,265,000. We put it in our answer book and then use it to calculate our balancing figure. So if I take this amount and I subtract the amount that I was of this total right here, I will get my balancing figure. So starting with 5,265,000 minus 5,512,350, I get a minus 247,350. It's negative to show that it goes in bracket because again it's work in progress at the end of the year. It's a closing stock, and the same way that we dealt with closing stock and direct material where we subtracted it, we are also going to do the same thing with our work in progress. Our closing stock will always be subtracted because in the following year it is always added like they did here. Moving on to our abridged statement of comprehensive income, we see that we have been given a gross profit, meaning that they have dealt with sales and cost of sales for us, and we are taking it from just the expenses of this statement. Now we know that this statement has only two expenses, one being administration cost and the other being selling and distribution cost. When we are talking about administration cost, we are talking about everything else that affects our office. So as we are looking in our information, we are looking for all those things that belong to the office, and so long as that thing belongs to the office, it means that it affects our administration cost. In information B, our administration cost is given to us at 1,331,850. 50, and we are going to use information C in order to adjust this amount. Roman figure 1 says the entire insurance expense of 68,250 was entered as administration cost in error. We know that we have already dealt with this. The 60% of this amount was supposed to go to factory overheads, and when we calculated that 60%, it gave us 27,300, and we took that 27,300 to factory overheads. So that means if we added it to factory overheads, we need to come and subtract it here, that 27,300. And in case you forgot how we got this amount, we took the 68,250 and we multiplied it by 60 over 100, and it gave us this 27,300. That's how we got that amount. And then in Roman figure 2, which says factory overheads includes the total amount of rent paid for the financial year, which was 108,900. The rent expense should have been allocated to the floor area occupied as follows: factory 400, shop 80, and office 120. Like I said before, that what we are looking for in terms of administration, we are looking for what belongs to the office. So we need the office space we need the rent amount for the office. So to get that amount, we are going to use that 108,900 to figure out our office rent amount. So our office is 120 all over. Again, we add them together, 600, because 108 represents the full 600, and what we are looking for is the 120 that belongs to our office space alone. And then working it out, again, we have the amount that we started with in information B subtracted the amount that was not supposed to be in our insurance as it belonged to factory overheads, and now we are going to add our rent by punching all of this in the calculator, and it gives us a total of 21,780, and our total for administration cost is 128,330. Our last expense for this abridged income statement is the selling distribution cost, and it is given to us in information B as 1,829,550. Again, going back to information C, we see that our selling and distribution is not affected by Roman figure 1, but it is affected by Roman figure 2, where we need to calculate the rent for the shop this time. So we are going to add again 108,900, and this time we are looking for the shop, so we are going to use 80 all over 600. So that's 1,829,550 plus, put this in your calculator, and it gives you 14,520, and your total for selling and distribution is 1,084,070. Remember, these are your expenses, so they should go in brackets. So starting with your gross profit minus your admin minus your selling and distribution, 1,777,600 is my net profit. Moving on to 2.2, they want you to explain the difference between fixed cost and variable cost. Now, with theory questions, I always advise that never leave a blank space, and when you answer these questions, make sure that you keep it as simple as possible. Don't try to complicate the English. They just want you to move straight to the point. So when I want to describe what variable cost is costs that change with production. So I can just say changes with production. And when I talk about fixed costs, they are those costs that do not change. They remain constant regardless of how much I produce. So even as keeping it as simple as this, you can get your marks. Just keep simple English, straightforward and to the point. 2.2 wants you to calculate the break-even point using the information on 2.2 in information A. This one is a different company. It's a Lexus manufacturers and they produce pencil cases. So they have given you information A of their variable cost, their fixed cost, their selling price, the number of units they produced and sold, and even the break-even point for the previous year. We have to calculate the one for this current year, hence it is a question mark. So to calculate break-even point, we know that break-even point has a formula that says break-even is equals to fixed cost all over contribution per unit. So fixed cost, we know that, as we have discussed previously, that it is those costs that do not change regardless of production. They have given them to us at 16 rands 20 per unit. We know that they have produced 240 units. That's given to us, so we'll just have to multiply those two in terms of our calculation. And when it comes to our contribution per unit, what makes up contribution per unit? Contribution per unit is equals to, you take a selling price per unit and you subtract from it variable cost per unit, and that's what gives you your contribution per unit. So we can go ahead and substitute. Break-even point is equals to fixed cost. To get our fixed cost, like we said, we are just going to take, because they have given it to us per unit, we just have to make it a full amount. It has to be a total fixed cost. So make sure that whatever you do with the fixed cost, it has to always be a total. So if they have given it to you per unit, like they have done in this case, you will have to go and multiply it with the units that were produced that year. So the units that were produced that year is 240,000 units. Multiply them by 16 rands 20, which is our fixed cost per unit, all over our contribution per unit that we said it's a selling price per unit. They have given us our selling price per unit at 53 rands and 40 cents minus variable cost per unit that they have given to us at 34 rands and 80 cents. So this part in your calculator, 240,000 times 16 rands 20 will give you 3,888,000 as your total fixed cost. All over your contribution per unit is going to give you 18 rands and 60 cents. Our final answer there, when you put it in your calculator, will give you 209,032,2581. So when we round off, when we're dealing with a break-even point, we are unable to produce a 0.25 unit. We have to produce a whole unit. It kind of defies the rules of rounding off a little bit, because usually when it is a 2 after your comma, you will just leave this at 32. But because we need this unit, this half a unit or this quarter of a unit, we need it. Without it, we are not actually breaking even. So we would rather produce that one more unit to make sure that we are not making a loss. So when you round it off, it will be 209 and 33 units. That is your break-even point as a correct answer. To have YouTube recommend you more of my videos, be sure to click the like button and leave any questions that you have in the comment section below, and make sure that you subscribe so that you don't miss any of the upcoming uploads.